Gold on Monday finally crossed that magical $3,000 mark. And not only has it managed to sustain that price level, it's pushed as high as over $3,030, a figure which seemed like a dream just a few short months ago. While positive, it bodes even better for producers, whom are starting to see some love in the markets finally with this key level being crossed. And for producers, posting positive earnings as gold has this kind of momentum, it serves them even better. Take, for instance, K92 Mining, who on Monday released positive Q4 results and was rewarded with a 7% jump in their share price. Guys, we're talking earnings, we're talking K2. Let's dive in. The fourth quarter was a strong one for K92, who saw a number of new records set in terms of financial results. One record that was notably absent, however, was revenue, which was a near record at $120.3 million, which was a 60% increase from the $75.3 million recorded in the fourth quarter of last year. This revenue bump was off the back of the sale of 48,851 ounces of gold at a price of $25.64 an ounce, versus the 33,273 gold ounces sold in the year-ago period. And despite this increase in gold sold and top-line revenue, cost of sales actually fell on a year-over-year basis, dropping from $35.9 million to $32.6. Net earnings for the quarter totaled $55.5 million, or 23 cents per share, a new record for the company, and an increase of 178% on a year-over-year basis from the $20 million, or 8 cents per share, recorded in the year-ago period. EBITDA, meanwhile, hit a record high of $84.2 million, or 30 cents per share, an 87% increase year-over-year for the fourth quarter. Operating cash flows also came in at a record high of $72 million, while K92 hit a new high in terms of cash and cash equivalents at $141 million. For the full year, K92 managed to achieve a record $351 million in revenue, a 75% jump from 2023's figure of $200 million. This was a result of gold sales of 141,000 ounces, a 45% improvement over the 97,000 ounces sold in 2023. The average realized gold price, meanwhile, improved 26%, going from $18.69 an ounce to $23.56 an ounce on a year-over-year basis, further contributing to the dramatic rise in revenues. Cost of sales, unlike in Q4, however, did rise year-over-year, moving from $111 million to $142 million in 2024. And with record revenues, it's not surprising that K92 also saw record net income, which came in at $111 million, or 46 cents per share, a 235% increase from the $33 million, or 14 cents per share in net earnings reported for 2023. EBITDA, meanwhile, improved 108%, landing at $197 million, or 83 cents per share. Operating cash flow hit a new record for 2024 as well, at $170 million. Well, the financials were unquestionably strong for K92 in both Q4 and all of 2024. This was obviously a result of strong production results over those time periods. Production in the fourth quarter hit new records with a total of 53,401 gold equivalent ounces produced in Q4 of 2024, as compared to 39,101 gold equivalent ounces in Q4 of 2023, a 27% improvement. Broken out, production included 51,000 ounces of gold, 958,000 pounds of copper, and 42,000 ounces of silver. Feed grades, meanwhile, improved from 7.4 grams per ton to 17.3 grams per ton, while ore processed nosedived from 152,000 tons to 97,000 tons, with throughput said to have been deliberately reduced to maximize recoveries at higher grades. This translated to record recoveries for gold at 96.4%. Cash costs per ounce sold moved from $430 to $483, a 12% increase on a year-over-year basis. Yet, all-in sustaining costs fell, dropping 21% year-over-year from $1062 to $837 an ounce in the fourth quarter. For the full fiscal year, new records were also hit for production, with 150,000 gold equivalent ounces produced versus 118,000 gold equivalent ounces produced in 2023, a 27% improvement, well strongly beating guidance that had called for 150,000 120 to 140,000 ounces of equivalent production. Broken out, K92 in 2024 produced 4.9 million pounds of copper, 142,000 ounces of silver, and 139,000 ounces of gold. For the full year, ore processed declined from 504 to 528,000 tons, while grades improved from 6.8 to 10.7 grams per ton. In terms of costing, cash cost per ounce sold increased from $585 to $664 an ounce, a 14% jump, while all-in sustaining cost declined from $1162 to $1066 an ounce, an 8% improvement. Guidance had called for cash costs in a range of $820 to $880 an ounce, alongside AISC guidance of $1440 to $1540 an ounce. Well, obviously positive, the massive beat calls into question K92's ability to sufficiently forecast costing for their operations. And on that note, let's look at the current guidance for 2025 that has been issued by K92. Production is expected to continue to grow in 2025, with K92 calling for 160 to 185,000 ounces of gold equivalent production, which on a midpoint basis reflects production growth of about 15%. The growth is expected to be derived from the commissioning and ramp up of a new 1.2 million ton per annum Stage 3 processing plant, which is expected to come into operation in the second half of Q2. The company, meanwhile, is being more optimistic on its cash cost guidance this year, calling for cash costs of $710 to $770 per gold ounce, while all-in sustaining costs are expected to be $1460 to $1560 an ounce, both sets of figures of which are on a net of byproduct credit basis. On a co-product basis, costing is expected to come in at $830 to $890 per ounce of gold equivalent, while AISC is slated to be between $1490 to $1590 per gold equivalent ounce. The company is also expecting to spend between $17 and $20 million on exploration in 2025, while growth capital is to come in between $105 to $110 million. All right, so let's wrap it up. 2024 was a strong year for K92, with the company posting one of the lowest, if not the lowest, all-in sustaining cost levels in the industry, which translates well as gold confidently crosses the $3,000 mark. K92 is making close to $2,000 an ounce in pure margin on each gold ounce sold, making it hard for shareholders to complain here. But look, they're clearly mining some of the high-grade stuff this quarter, so we gotta take it with a little bit of a grain of salt. Anyways, I suspect it's only a matter of time until some of that capital starts to be returned to shareholders. All right, guys, I'm back from vacation. We are bringing you guys the heat once again from Small Cap Studios here in Ajax, Ontario. Guys, if there's stories you want us to cover, please let us know in the comment section. Also, if you haven't already, please hit that like button. Thanks for watching, everybody.